Welcome to The Explainer. Today we're going to dive into a trading philosophy that pretty much turns conventional wisdom on its head. The whole idea is that the real secret to the markets isn't some super complex analysis, but actually a very simple truth, a truth that's hidden behind this massive illusion. So let's start peeling back those layers.
Okay, let's just kick things off with the biggest question of all, right? Why do most traders lose money? I mean, you've heard all the usual answers. Oh, they have bad discipline, or they're using the wrong indicators. But what if those are just symptoms? The source material we're digging into today says the real problem goes way deeper. It's about a fundamental misunderstanding of what actually truly makes prices move in the first place.
So it really all boils down to this idea of two completely different worlds. See, most traders are stuck living in this world of illusion. It's loud, it's chaotic, it's driven by flashing news headlines and whatever the so-called experts are yelling about. It's pure emotion. But underneath all of that noise, there's another world, the world of reality. And you know what? That reality is incredibly simple. It's mechanical, and it's based on laws that never, ever change.
So here's the breakdown. On one side, you've got the illusion. This is where everyone follows the crowd, chases prices that are already sky high, and reacts emotionally to every bit of news. This is where traders buy high and sell low. And then, there's reality. Thinking for yourself, buying at wholesale prices, following a plan. And it's all based on the simple laws of supply and demand, the same laws that determine the price of, well, anything, from a share of stock to an avocado at the grocery store.
Okay, to really get our heads around this world of illusion, the source material gives us this great little metaphor. It asks us to take a trip to a town called Foolsville. Now in Foolsville, everybody thinks exactly the same. They all watch the same financial news, they all feel the same surge of greed, the same pang of fear, and crucially, they all end up making the exact same trading mistakes. It is the capital city of herd mentality.
Now check out the unofficial rulebook for trading in Foolsville. Buy when the news is great, sell when it's terrible, jump on the bandwagon if everyone else is buying, and here's the kicker, only get in after a huge price move has already happened. The crazy thing is, these rules almost sound sensible, right? But what they actually do is program you step by step to buy at the absolute peak of excitement and sell at the bottom of despair. It's a foolproof recipe for losing money.
And this quote right here, it just perfectly sums up the whole Foolsville mindset. Think about what it's saying. Someone is buying after the price has already shot up, and they're buying right where the price is hitting a ceiling. This isn't some brilliant strategy. This is a purely emotional decision. It's the fear of missing out, FOMO, kicking in at literally the worst possible moment, the point of maximum financial risk.
All right, so if Foolsville is the illusion, then what in the world is the reality? Well, let's step out of that crazy town for a second, because the big secret to how markets really work, it's something you probably figured out when you were like 8 years old running a lemonade stand.
I mean, come on, how simple is this? As a kid, you just knew what to do. You buy your supplies, your lemons and your sugar, for cheap. That's your wholesale cost. Then you mix them up with some free water, and you sell the finished lemonade for a much higher price. That's your retail price. That simple principle, buy low, sell high, is the engine that drives literally every business on earth. And guess what? The financial markets are no different.
So, in the world of trading, that wholesale price has a name. It's called a demand zone. And this is super important. It's not just some random low point on a chart. It's a very specific price level where there are way more people wanting to buy than there are people wanting to sell. Why? Because that's where big institutions are placing huge buy orders. It's where the real demand is waiting.
And you guessed it, the retail price is called a supply zone. This is the complete opposite. It's a price level where there's a flood of sellers who completely overwhelm the buyers. This creates a natural ceiling that the price has a really hard time breaking through. And this is where the pros are looking to sell, often to the poor folks just arriving from Foolsville who are buying at the top.
So how do you take this simple lemonade stand logic and turn it into a professional's playbook? Well, here's the key. It's not about trying to predict the future. It's not magic. A professional trader just gets really, really good at identifying these clear zones of imbalance, these supply and demand levels, and then they just act on them.
And this chart just lays it all out, plain and simple. The novice trader, our friend from Foolsville, sees a huge rally and gets excited. He buys right as the price is hitting a supply zone, which is exactly where the professional is waiting to sell to him. Then the price drops, the news gets scary, and the novice panics and sells right into a demand zone, where that same professional is now calmly buying it back.
It's a complete flip. The pro is simply taking the other side of the novice's emotional trade.
And this quote, man, this is really the entire strategy in one sentence. Where the smart money is buying is exactly where the retail crowd is panicking and selling. And where the smart money is selling is where the retail crowd is getting greedy and buying. It's a zero-sum game, and making money is all about understanding which side of that transfer you need to be on.
Okay, so this brings us to the final, most powerful idea in this whole thing. If you're searching for that ultimate edge in trading, let me tell you, it's not some secret indicator or a complex algorithm. It's something much, much simpler than that.
That's it. That's the whole secret, right there on the screen. This piece of advice came from one of the author's mentors, a hugely successful trader on the Chicago Merc. It wasn't about outsmarting everyone. He just figured out what the losing traders did over and over again, and he did the opposite. He took the other side of their trades, period. It's about betting against the predictable patterns of Foolsville.
So, this all leads to one last question, and this one's for you. The next time you go to place a trade, ask yourself, are you acting based on the simple, boring reality of supply and demand? Or are you being driven by the headlines, the excitement, the fear, the whole emotional roller coaster that powers the town of Foolsville? Because the answer to that question really determines everything.